What's up, chat? Today we're going to be doing a video on NASDAQ for October 22nd of 2025. I was doing a bit of my personal backtesting and I ran across the state and I realized like the price action was really good. There's a lot to learn from the state, and also there's things that I noticed that I make mistakes on in my live trading that highlights it really well in today's price action. So I wanted to do like a full deep dive of today's trade and just to get my whole thought process out there. Hopefully you'll learn and hopefully this will benefit me. It will stick better so I don't make the same mistakes in live trading. That being said, let's get straight into it. We're gonna first look at this on the higher time frame. Let's see what we got. We're gonna just mark out all the higher time frame PD arrays. Let's see. Wait, was this the date? October 22nd. Yeah. Okay. We start with the daily. So with the daily, as we're saying, we're at the all-time high. And not only are we at the all-time high, but we also just made a what's my tool? There we go. We also just swept this high, the previous high, which leads me to believe, and actually mark it as a sweep. Nice. Okay. So now this leads us to potentially pulling back to this FEG. So this would be our first draw. Let me change the thing. This would technically be considered like it's like a previous day candle. So I'm just gonna write previous day low for now. And then now we can hop on the H4. On the H4, there's a lot to see here. And this is where it gets good because like another thing that I noticed in live trading is like I'll get fixated on like a specific draw on the day, and then after it hits it, which is usually the nearest draw, but what I'm failing to realize is I need to look at the bigger picture. And looking at the bigger picture is understanding where the market's gonna go overall, not just the nearest draw. So with that being said, you'll see now that I'm marking out a bunch of draws that are all nearby. This is the order block I'm seeing on the H4. We have the previous day low marked. We have another H4 FEG, but it kind of really aligns with the previous day. But just for the hell of it, I will go ahead and mark that up as well, so we don't miss anything. Oops. H4 FEG. Okay. And then another key point right here would be, see this like massive leg, like the current leg we're on. This is the previous candle's 4-hour fair value gap. So I'll probably name it like H4 first fair value gap for now. That's fine. And actually just like make a box for that. Fiji. Okay. Are we missing anything else? Not on the H4. I think that's good for now. Let's go on the H1. Mm, this could be this right here is the sell side liquidity. It's like just before it made them move up. This was a protected low at the time. So let's bring this here. Oops, forgot it. Let me just make it sell side liquidity. Now we have all our draws. And the idea for the day is still simple. It's still just we're in a range right here. So the idea is we come down. Where's my tool? screw the tool. I can't find it. It's gonna take forever. We just come down here, somewhere here, even potentially this low FEG, the first FEG of the 4 hour. So we potentially come here, and then if we respect it and hold it, then we make a new high. So that's the ideology going into the day. So now that we have all the draws laid out, we see what the overall market's trying to do. We're gonna go in with that mindset that these are all the draws we're trying to aim for, potentially. So now we go on the M15, just take a look at the market, and again, we're seeing a huge range right here, which means we have to sit on our hands, wait for it to break out of the range. It can literally create an AMD, either go up, but we already swept, keep that in mind. It could go up, manipulate, and distribute, or we can, since we already swept over here, we can manipulate downwards, then distribute up. All that being said, now we're gonna go on the M5, and we're just gonna let price play through, and I will let you guys know if I see something and any key points about it. Okay, making lower highs, lower lows. Okay, so next candle, I'm going to stay on the M5. Okay, yeah. So even right off the bat, right off the market open, we immediately take out our H4, or first fair value gap. We take out the previous day low immediately, right? So now, what our first thought is we're gonna continue lower. So now we can potentially look to go on the lower time frame, like the M1, and look for like a tap into the FEG to continue lower to our draws. That's what I'm gonna do here. If I remember correctly, we're not gonna get that. Yeah, perfect. Okay, so now when we're seeing this, we're seeing it hitting a higher time frame PD array, and it's showing very bullish signs of momentum, like upwards. I believe if we go on the 3 minute time frame, the 2 minute, yeah, the 2 minute looks very clean. Let's see. Okay, we're gonna take it off the 3 minute here. So right now we're seeing it hitting the higher time frame PDA array, correct? And now we're having a bullish move up. So naturally, you would imagine we're gonna go up. We're gonna take a trade long here, right off that close, because we closed above the inversion. Our stop loss is gonna be here on the body. TP is gonna be the high of day. And let me just also mark out the inverse fair value gap here. Oops. That's what we just inversed off the PD rate. Just to be clear, that's what we're basing the trade off of. So we're gonna take this trade right off the bat, and boom. Actually, now watch. It came, retested our entry exactly. Now we definitely have to break even at this point. I'm sure it hits right after. Okay, there we go. That's already a TP right off the bat. Market just opened, but this is where like the market kind of gets more interesting, in my opinion, which is why I wanted to make the video on today's price action. So now that we see this full bullish move up on the M5, not only did we hit the PD array, move, make a new high, we also closed them above this inversion fair value gap. So I think when I was trading this live market, I could be wrong, but when I was looking at this, I was too fixated on the idea that we just hit the drop day and now we pushed up. I felt like now maybe like what else is there left to do? We already hit the draw. Now we're just gonna make all-time highs. So maybe I start to look for bullish signs. I mean, even if you go on the M15, you see that wick. Like, come on, how are you not thinking we're gonna go bullish, right? Which is the biggest mistake we're making. So I don't know what this is. Okay. So with that being in mind, that's why we have to stay on the higher time frame like that. We have to stay on the M15 and M5, constantly switching and try to get the idea of the trade, of what's going on here, rather than just being stuck on the 1 minute, understanding that we're bullish now and just looking for longs and then never getting it. Because Now that we're on the M15 here, we see this took that. I might be talking a lot this video, but I feel like this is very important. So watch. We're on the first M15 fair value gap right here. We have yet to close above it. If anything, I would say we're rejecting still, especially with this wick. So knowing that we're still in that MFVG, can't break above it, and we still have draws below. I mean, at this point, it's pretty clear we should still look for shorts, even though we got this insane reaction on the M15. So I'm gonna go back on the M5, and we're gonna look to see if, or maybe like, I'm gonna keep this on the chart just to make sense later on. But now that we have that ideology of it looking to go bearish, let me get an inverse fair value gap here. This should have been inverse as well. Okay, so now on the five, we're going to play through price action, see if the idea of the M15 being bearish still holds. And there we go. Now, when you're seeing this, we just inverted that on the M5. We don't even need to go on like a different time frame. This is pretty much like the tell-all at this point. Insane displacement. Look at the M15, how it's forming. That M15 closed like that. So now I'm gonna take another trade here. Where's it at? It's gonna be just short this time. We're gonna enter right off that. Stop loss above this M5's wick. TP. I might want to take it all the way to this will be this dotted line right here is like the M5 or not M5 one the order blocks 50%, which would be a good target. I think that's what we're gonna aim to go for. It's a 2.35. We could really do just two to play it safe. I think I'm good actually. Let's protect ourselves and put the stop loss a bit higher. Put it on that thing. In that case, now we can just go here, 2R right there. Make it a little nicer, make it 2R, but that's pretty much a 2R. There we go. So now we're gonna enter shorts with a safer stop loss. Take that. Let's play through price action. There we go. Move stops to break even. And TP hit right off like that. And we haven't even gone on the M1 yet. This was strictly M5. Knowing what we're doing on the M15, knowing we still have draws on the higher time frame PD arrays. And like, remember, we have not gone on that one yet. And we're still not going to need to. There's still another setup, I believe, that's going to come up. So now if we go on the M15 again, now we're seeing we just made a new low, hit this PD array, but do we have anything lower? We still have this sell side liquidity and the first H1 fair value gap of this bullish leg that we're trading down into. So now that I'm seeing this, now I see another M15 fair. Oops. I'm seeing another M15. Oh my God. And I'm seeing another M15 fair value gap forming here, which would be our little, we would need this to tap into to continue lower to these draws. So for that, we're going to go back to the M5. We are going to play through price and see if we can get a rejection retracement type of thing, or price will just go without us. Okay, pulled back. Perfect. Now if it rejects here, rejected. Did it inverse? It didn't quite inverse. We could maybe wait for another candle. See the M15. I took these trades like a few hours ago, so I'm kind of forgetting it. But no, I'm gonna wait for one more candle. There we go. I mean, at this point, this is bearish as hell. Um, Short position. We should probably cover the bodies here. Let's look at the TP real quick. Stop loss here. Oops. We're gonna move the stop loss here on the M5. It's fair on the bodies right there, bringing us almost at 1.5. So we're gonna enter the short. Oh my God. Yeah, well, that hit TP right off the bat. And again, we're still on the M5. No need to go on the M1, which is such a big issue that I'm having where I go on the M1 and I completely lose where I'm at. I just get that tunnel visioned and I lose track of what's going on after the fact. Like it's insane. I don't know why it keeps happening to me in live trading. So now the market is at 11:20. At this point, we're done for the day. But if I do remember correctly, we still get another setup after this. I would have never taken this in live markets probably just because of the time. But for this example purposes, we're gonna play through price one more time. Let me see. So we rejected. We're making a new low. Let's play through price a bit. Okay. Okay, there we go. So M15 gave us another FEG here. Let's mark that up. So now if we can get a pullback into this, there we go, exactly. And this one closed right below. This is perfect. And again, yeah, I know it's out of session, but we just know the market's just dumping the entire day. We shouldn't stop right after. Here, let's put the draw here again. With a 2.0, let's put the stops all the way here. 2.5 R, that's gonna be insane. Let's take this trade. And I'm gonna go break even after this. That's a good push down, but I'm gonna go break even after that. Oh, never mind. TP hit. That's how it's done. And that was literally four trades. Easy as hell, all on the M5, all because I didn't get tunnel visioned on the M1. Like if I was to go on M1 right now, and we're looking at this right here, obviously we know what happened now, but when you're looking at some M1, we see the draw getting a hit, and now we're bullish. So now we're waiting for signs to go up. We don't get it. We miss this full short. Then we think the draw got hit again, and then the day's done. And then maybe here we're even considering being bullish again. You see what I'm trying to get at? Like we're really just losing what the market's trying to do, and it's so much more simpler than that when you really look at it on the like the M15 tells the story, and H1 and H4 really are the targets, and the M5 is really just for the entries. Literally the only reason we would ever have to go on that one is just in case we want to wait for like another pullback to get a better entry. But besides that, entering on M5 is really looking really clean. And if there's anything I want else to say, I think I touched all the points I wanted to make. Not getting trapped on the M1 and not getting just like fixated on the idea where like we hit the first draw, the nearest draw, and that's it for the day when there's so much more for the day that can happen where because New York session and NQ just moves a lot on a daily basis. Yes, I could see like today's candle was H4 was bigger than most, but we have it often. So those are the two biggest takeaways, and I hope this helps. Thanks. Bye.